Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 2nd, 2017. In this video, I'd like to do a compilation of some of the various things that I'm watching out there. So it's really a potpourri, if you will, combination of long, shorts. There's been a lot of focus on the market, and I do market updates, and it's obviously not a secret. I've been looking for a sharp pullback to start. I thought that would start last week. It hasn't done so, but I haven't abandoned that thought yet, and or that view, I should say. And again, that's been covered extensively in other videos. But now let's talk about trading. I mean, I know a few traders out there, especially those new to trading, you like to trade the markets. And I've always said this, that when you trade the SPY, the S&P 500 or QQQ, the NASDAQ 100, whether you're trading long or short, you're buying all the good or shorting all the good and bad stocks together. The S&P 500, there's roughly 500 companies, and without a doubt, you're going to have some that are in bearish trends. And also I can say this, the market, at least since the elections, has been unusually difficult to call, at least for me. There are times, if you followed the site for years, there are times I can call the markets with near impunity to the turns, corrections, tops, bottoms, where it's going to bounce. And then there's other times, like recently, it seems I just can't get out of my own way. It just, keeps defying technicals, divergences building. But with that being said, that's the market. And, the bulk of what I trade, and I make this very clear, I'll put on a broad market short or a couple broad market shorts, but that's a small part of my portfolio. With those, I can leverage a little more. You don't have the risk of a big earnings induced gap. If you trade, let's say, a biotech stock, and you're sitting on that long or short, and good or bad news comes out on one of the drugs they have in clinical trials, you're either going to have a windfall profit when you wake up to a large gap in your direction, or a huge loss. Now, that's not the case with the broad market. Hence the reason I do the coverage. Some people like to trade it. Some people like to know where it's going. But the bulk of what I trade are individual stocks and sector ETFs, and I'm going to go over those today. We've had a mixed bag, and the theme that you'll see as I go through here in the trading room. I wanted to go through a lot of the unofficial trade ideas lately, and maybe touch on a few of the official trade ideas. And the common theme you'll see is that these stocks are obscure companies with very little, if any, correlation to the broad market. That's what I've been focusing on, and that is primarily a function of the fact that I think these markets are dangerous right now. Sure, the trend is up, and it's as powerful as it's been in years, but I see so many red flags that it's not worth it. The risk to reward is not worth it. That's what I talk about in trading, and just about any trader will. So, if you're going to go long and you're looking to make a dollar, well, you certainly don't want to risk a dollar on the downside. You only want to risk 30 cents or so. So that's not the case right now. I think the next 10% in the market is more likely to be to the downside than the upside. And if I'm wrong, I'm certainly not going to be betting against it. That's the other thing. I put out analysis because that's part of what this site is all about. Both broad market analysis, sector analysis, individual stock trade ideas. But right or wrong, you don't have to fight it, and of course you don't have to take a trade you're not comfortable with. All right, with that being said, let's dive in now. This is the trading room. For those of you who are gold members or free trial members, you have access to the trading room, and this is where I would say, well, without a doubt, the vast majority of the trade ideas that I post are, as well as other traders are posting ideas in here. Why have there been, especially in this year so far, a lot more unofficial trade ideas than official? It's because of my lack of confidence in the market. The rally since the elections has been, I don't want to use the word unnatural, but it's just not my comfort level, this market. So I'm trying to avoid those stocks, the top holdings in the QQQs, things like that. Instead, finding obscure stocks that have standout technical patterns and have very little correlation to the broad market, whatever it's doing. So we're going to go here within the trading room, and we have groups. You can click on this link right here, and it'll explain what groups are all about, but they're pretty self-explanatory. So I'll click on swing trading. That's most of the ideas on this site fall into the swing trading category. So as we go through here, And this is not all inclusive because sometimes I'll reply, someone will ask an opinion on a stock, and I'll post my reply under there. And if they didn't already categorize their post under the swing trading category, it won't show in this category. So just going to walk through here real quick, talk about what's going on the site. So here's Kara. This has been a long official and unofficial trade idea on the site for a long time now. All the way back here. I mean, this stock from where I can't remember where it was first mentioned, maybe back over here. Here's a stock that's gone up easily, over 200%, and this was a long-standing price target. I mentioned, taking profits on the way, being long through most of this trading this thing just mostly long, but long and short. Selling at resistance levels, buying on pullbacks. There's a breakout of the symmetrical triangle pattern. There's your objective entry as this trend line started to form. I mentioned that there. When we cleared this 1335 price target, I had booked profits there, but mentioned looking to scale back in on a pullback to support, and that's what we had. We had a perfect. I mean, the technicals on this stock have been just tremendous. Pull back to that 1335 level, which again was a long-standing target that I had. And you can see two successful tests. Then we came up, we pulled back again, found support at this uptrend line. And today we hit that what was, originally and still is at this time, I want to call it my near-term final target. I made clear in the trading room that I may recycle back into this one long. I do like the fundamental story, but at this point in time, I did short it right around the highs today, and you can see technical analysis. This isn't coincidence. The stock hit a high today of 1813 versus the target. I always say my targets are set just below the actual resistance level, and I made it clear this was the actual resistance level. So I took profits on the shares that I recycled back in on that pullback to 1335. I'm out, and I'm actually shorting and expecting a pullback. And if you're looking, I think I posted this one in the trading room. Here's a 60-minute chart. Your next sell signal is a break of this minor uptrend line. I think we'll get a reaction here, very likely. And of course, you could cover that for a quick pullback trade. If you shorted around the $18 level today, that alone is a 12, 13% drop. And if we continue on down, where I think we will before all is said and done, we're looking at a good 20, 23% drop or so to the top of this support zone right here, target zone. Here's a divergence. So there's, again, an obscure little stock. This is a very small biotech stock, very small market cap. I'm looking, if my numbers are accurate, it's only a $437 million company now. It was much smaller than that when we started going long in there. So that's one of several examples of the, low correlation to the broad market kind of type of stocks I'm trading recently. Let's see here. Go down the line. Teva, talked about Teva before. That one may have been an official trade idea. I can't recall. Teva was, this bullish falling wedge pattern. We broke above it. I mentioned 35 also was a level. So it had some nice gains. It doesn't look like much on this chart because this is a log scale. But so far, from that point, Teva went up about 9%. It's pulled back in. It's just below that 35 level now. Something to watch. I'm not crazy. It looks like a pending bearish crossover on the PPO. It may want to come back in and back test this. So far it broke out, but there's not a lot of follow through, and I wasn't crazy about the volume on that, or at least as of recently. So not one that I'm in right now, just one to watch maybe on a back test of that line. USRM, I've talked about this one, covered it quite a bit in the trading room recently. This was just a small speculative play, and it doesn't take much. I put in, it was first mentioned back here, somebody asked my opinion, and that one went up over 1,000%. And I posted 2 days ago hitting this price target, and that was the last entry. Again, I covered this, I believe, in a video yesterday. The previous entry I had on it, or the second entry, was about a pop over 0.006. And from there, I think it was like a 700 and something percent gain, almost 800% gain. And the point is, look at a lot of these trades. Pay attention as we go through this video where the final targets, where I say the risk return is, no longer attractive. Instead of putting a trailing stop or anything, I decided to book full profits because a reaction was very likely in a sharp pullback, and the stock did drop over 50% between the next day and into this morning, there was over, I think, 50 or 60% pullback on that stock. And again, this is something that has no correlation. The broad markets can be melting down or on fire on the upside, and these kind of stocks don't care. They tend to march to their own drumbeat. Very small micro cap. This is a pink sheet stock, so ultra high risk. But again, it doesn't take a lot. If you usually put in 20, 30,000 a trade or $5,000 in a trade, whatever your number is, you put a few $100 in these little things, and if they go down, you don't put more than $1,000 unless you're trading blocks of 100,000 or more in a trade. You could put a little more, but you're going to move the market. You got to be careful. If you don't know what I'm talking about, stay away from pink sheet stocks. But if you want to take small amounts, it doesn't take much. $500 with a 700% gain. Do the math. The profits are pretty handsome there. Next one up would be, let's go back to the trading room here. And I'm just scrolling down again, guys, in order here, reverse chronological order. What else have we pointed out here? USRM, a lot on USRM recently. Clovis, there's an update on Clovis. That's an official trade. It's stalling out here. I don't want to say getting frustrated. I have patience when trading, but what happens is we had a bearish rising wedge pattern. We broke down. This is my first target. It was and still is. And I'm still short, but I may cover this one, just book profit. The trade is profitable. I can't tell you by how much. I'll have to look at it now. We had a breakdown and back test. I can't remember. Shorted somewhere up in there. But the fact that it's moving sideways after a steep rising wedge breakdown, this could be the correction that you're looking for. Stocks can correct in two ways. They can correct, or any combination thereof. They can correct in price, like this, or in time, which is sideways, and then continue on up. Either one, a quick correction to the downside will work off overbought conditions, and as will a sideways correction in time. That will also, you can see here when we're overbought it, the RSI starts to move back up. So that's Clovis. Again, I'll leave it as an official trade idea because the stops were set. You're not going to, relative to the targets, not too bad, but do what you want on that one. I wouldn't like to see it get above the recent highs. Let's see what else we have. Okay, back to the trading room. There was a mention of NVIDIA. NVIDIA was an active trade that was stopped out earlier this year, late last year. Looks really ripe. I mentioned that there's been a few updates within the trading room. These two red lines, this ascending price channel, really was the level to watch. And most recently, we broke down. We gapped below it. This was a pretty key support level I have here, 99.88. We flirted around it, had a brief intraday break, but you can see a green candle. That means we snapped back and closed above it. So look how many reactions. I mean, reaction, if you count that, that's where we closed. We held above it all these days. We're flirting with it right now. Don't go down to the penny. This is $100 stock, so give or take 20 cents or so. So roughly the $100 level. But that one, look at the divergences. Bearish engulfing candlestick at the high. See that? I'll mention this in a minute here. We have one going on in the financials right now. That's one of my favorite short sectors right now is XLF. But again, I'll get to that in a minute. All right, next up would be, let's see, the miners. If I have time, I'll get to that. Okay, here's another one, Hertz, HTZ. Again, I can't remember if I put this one official or not. I'll have to look on there. Official, unofficial, just has to it speaks to my confidence in the trade ideas. And again, they've been on the light side on the official trade ideas, but quite a bit in the trading room. And Hertz is defending that $20 level like a champ. It's look how many reactions there. Right around or right off the $20 level, which I mentioned is a key support level. And then we had a pretty impulsive move the other day. So from that $20 level, it's popped as high as 22%. Again, doesn't look like much. I use log scaling. This stock had a heck of a drop. That's why it doesn't, with log scaling, it's all different from arithmetic scaling like this. Doesn't look like much of a drop there. I always use log scaling on my chart, especially daily time frames. So there it is. So that one looks good so far. As long as it remains above that $20 level, especially on a daily or weekly closing basis. A weekly close below there would be bad news for the stock. Okay, back to the trading room. Teva, I already mentioned. I think I just covered that. LI.V, this is also, you can buy it on the American exchanges, Bulletin Board or Pink Sheet under LIACF. So LI.V, let's actually go back to the trading room and let's look at the chart on that one. LI.V, if I expand my post here, we should have a chart. There's a chart. Chart pops up. This is where I mentioned it's moving on increasing volume, could break out that bullish falling wedge. So there's a price target, 24. Let's see what that's done. I haven't even checked that one in a while. LI.V. It certainly did. It popped above the wedge. And again, on a log scale, a little low price stock like this won't look like much. So I'm going to try to grab. I'm just grabbing if you look at the horizontal line on the crosshairs, that's where the breakout occurred. Now I measure up to the highs, and that shows me that one ran about 16.5%. It's come back in and back tested the wedge, so maybe some potential long term. Volume's a little lacking, but if you look at it, I have the volume bars really muted. I like to keep my charts kind of clean, but you can see an increase certainly in volume. This could be bottoming action here, or a selling climax. So there's one to watch for the long term. And again, a little obscure small company, bullish falling wedge, and any or all of these targets. I could easily see this one working its way up to either of these two targets over time. And that just from here alone, if you try to quantify, that's 134%. That's 254% or 250 or whatever. So point being, don't put a lot. You can put enough into this stock as much as you're willing to lose on a normal trade, whether that's $500, whether it's $100. You put that in, even if this thing goes to zero, you would have lost no more than you would have on a typical trade if you're trading like the Qs or Apple. Yet, if your $500 or whatever it is goes up, 250%, you're probably going to make a lot more than you'd make on an average trade. That's how I approach these small stocks. That's what I refer to as beta adjusting your position size. There's a lot of risk in these low price penny stocks. And if you're not comfortable with them, stay away. But these are some of the ideas posted in the trading room recently. Next up, PBYI, that was mentioned. Now we're going back about 22 days. Remember, I've been scrolling down, so let's take a look at PBYI. Puma Biotech, that was the bullish falling wedge I posted there. It broke out. And from the point of the breakout, it ran up about 17%. And this was a target level here. And since pulled back in and it's back testing the wedge. So there was certainly a trading op there. And there still may be. It maybe holds a successful back test. You can also see support around this level. See those previous reaction highs? There's some support back here. So keep an eye on that stock. If it holds there, it might still have some potential. But it was certainly good for a quick trade, and most people probably would have took profits up there at that target. Okay, I covered Hertz already. PTLA, let's see. Let's look at this one here. Portola Pharmaceuticals, this was a nice one. Here's another, I pointed this out as a long trade idea on the breakout. So there was your entry, was good to go there. PTLA, let's take a look at what it did from that point. And try to grab it with my measuring tool. I'm putting a little bit above that line. Again, if I grab right on it, it's going to grab, if I grab on it, it's going to grab this trend line. That's a problem with TC2000. So I need to grab a little bit above it and measure up. And so far, that one's good for about a 38% run. So again, trade stocks, trade the best looking chart patterns, trade the market if you must. But I would, tell you that this is where a lot of the meat is on these individual stocks. And if you are long this one, I can't recall if I found this one on my own or somebody inquired about it. I'm not sure if you did. Congratulations. There's an uptrend line to watch now. If for a pullback or a breakdown would be a sign to get out, especially an intraday close. You can see an intraday break there, but we closed back above it. This one was tiny. Let me flip back. I'll show you in a second. Here's a downtrend line, a break, ran right up. I mean, looks like almost to the penny to that first target at 153, and since fell back. But that, let's see where we posted it. Tiny was, I mentioned, as a break on 155. Oh, no, I'm sorry then. I jumped ahead on the charts here. This one I had pointed out as a breakout, but mentioned that it wouldn't be a buy signal unless it broke above 155 or possibly on a back test of the downtrend line. This one fell off my radar since then. It never did take out that 155 level, and it's come back to the downtrend line, but we've moved back in. So let's forget about Tiny. Okay, next up is F-Cell. This one's still doing good. I've owned this one since this post. I like this one. Mentioned as a breakout on this 60-minute bullish falling wedge pattern. The stock was about 150 and was just below it. And let's see, I must also give you the daily chart. Yeah, here's a daily chart. Nice bullish falling wedge with positive divergence. Let's take a look at F-Cell, see what it's done since then. It's looking good. It just broke out of a bull flag recently. So here's that same bullish falling wedge daily chart. Broke out, ran up. That's about a 33% gain or so. Came back in a little, and see, this is the flag I'm talking about right here. This, you have a breakout, an impulsive move. That's the flagpole. This is your bull flag, and it started to move out. Now it needs to clear that previous reaction high around 180 or so to get going. Here's that 60-minute chart. There's the same falling wedge I pointed out. These are all micro levels. I put the darker, the more significant or salient resistance slash target levels in white here and numbered those, whereas the lighter gray lines are just minor levels, and you can see this stock acts tremendously well off these levels. It tends to hold and just trades off them. So what with trading, once resistance is taken out, that's bullish. So that's your next breakout point. So I mentioned that previous reaction high, but I'd like to see it get above 184, and that would also be the next target. And then this one looks good up here to anywhere between 205, 220. I'll tell you, I took a fraction of my shares off today. I had it in one account, a small IRA account, longer term account, and I just wanted a little more buying power to add to some short exposure. But I still have a price target. I think it's at 215 or somewhere right in the middle there. But this one, for now, it looks good, but that's what it needs to take out. And again, these are your off the map, off the radar, obscure little stocks, but these are what's doing well. These are what, at least where I've made my money this year, because goodness knows I've had a rough time on, overall in the shorts since the election. Okay, and as far as just going over the trade ideas in the trading room, we'll stop here, and then I'll share a couple of my favorite sectors and indexes right now. Last one, all we did is went back a month here, so you get an idea, and that's really, again, not every trade idea that's been posted in the trading room. There were others, even by myself, that were posted as replies to other people, but here's one that took off. This was an inquiry by the member here. HMIX is a stock. And there's my notes and my charts. HIMX could run on a break above this falling wedge pattern, blah, blah, blah. Best to wait till 585 till it's taken out. I said that because we also had horizontal resistance there. And that's mentioned the stock was also at support, long-term support. This is a weekly chart. So I like this stock. There's a case you could see was oversold as well. I had some notes there. Now, what's happened to HIMX since then, or HIMX? Let's go back to a daily chart, and the stock did nothing short of exploding. It took out that, what did I say, 525 level, whatever it was. There's the bullish falling wedge pattern. Might have went a little bit lower, but then it exploded once this wedge was taken out. I hadn't modified that trend line to now. I just dragged it down a little bit. And from the point that bullish falling wedge pattern was taken out, that stock ran up an impressive 45%. So these are the things I watch, guys. Bullish and bearish falling wedges. There are certainly other chart patterns that I look at, but these are some of the simple yet most effective patterns. And the steeper the wedge or the more powerful the divergences, the bigger the move. And I'm seeing that, setting up right now in quite a few sectors in the market. So let's talk on those real quick. So congrats to anyone that took HIMX. Unfortunately, I didn't catch that one. All right, sectors that I like, same story. You've heard it a bunch of times lately. Semis, these are just ready. They're ripe to go. This is SMH. Waiting for a break of this white uptrend line, the primary uptrend line. Very powerful negative divergences. Look at just price compressing here. This is what a wedge is all about. The vigor, the strength of these rallies begins to diminish, even though the trend is clearly up. This is the nature of a bearish rising wedge. It's confirmed with negative divergence. And again, I've pointed out, I'm looking for easily a 20% drop in the coming months in the semis. Be remiss not to look at the other semi ETFs. XSD, I have this minor uptrend line, which we're flirting with now. And below that, you have the primary white uptrend line. So that'll be your all clear when you see SMH, that white primary uptrend line go, as well as XSD. It's just a different semi ETF. And then the other big one that I watch is SOXX. And here's that minor uptrend line. We're cracking below there now, and that has its primary uptrend line quite a bit lower. But those are some of my favorites. And I'll do a separate video because I had a request from a member who didn't want to short SMH because there was a large margin requirement from his broker. And I can tell you right now, as I go through the individual holdings, there are some that I would short and some that I certainly wouldn't short. So I'll do that in a separate video. And to wrap up here, another one that I really like, I told you, is XLF. I'm going to click on, well, maybe I can do this here. I was going to put up the headline. It's on the Wall Street Journal, but actually I'm signed in, and that's a subscriber data, so I can't share that online. But the headline says, bankers are more upbeat about banks. So this is yesterday's headline after a big rally in the bank stocks. After XLF has rallied, what, since the elections, 30%, 28, yeah, about 30%. It makes me like this trade even more. When this is a one-sided trade right now. If they think that the bank stocks have nowhere to go because of deregulation and everything else, I say a lot of that is probably priced in, and I don't care what the fundamental story. We can debate that all day long. I see some very steep negative divergences. Yes, they are potential. I want to see this PPO cross over, make a bearish cross right here to confirm that divergence. So far today, I see a very nice bearish engulfing candlestick. It's also covering that gap. We gapped up there. This is a potential topping pattern right here. So I'm already short. I started scaling in short of the financials via several instruments, and I added to that today. And if you see, this gap backfill, that would be your first support level, where if this is just profit taking, a little healthy pullback, then this level should hold, these recent highs. If that goes, you can see support down there. But again, from the scope of this pattern, let's do it like this. I would put a trend line at this point and form a wedge here. And just from the scope of these divergences, and if I take a quick rough estimate and measurement of the wedge, you take the widest part of the wedge, which I'm doing here, right there, and you add that to where the wedge breaks down. Let's say it breaks down over here. That's going to bring me right about to this level here, and this was a big inverse head and shoulders pattern, and that target was hit. I've mentioned this before. So the financials, and I can go through these in another video. I'd like to do that. I have just about every one of the leading financial stocks. Here's my watch list. These are all the components, XLF. They're all sitting right on the key support levels with some steep divergences in place. So again, you're looking for sectors. I like those. I'll get to gold in a minute. Gold may be coming up. There's a couple things that probably warrants its own video. Let's see, I had set up I have a couple charts. This one I like I haven't covered this yet with you guys. There's it looks busy, but these are Fibonacci clusters. You have off the move down from right here, from this point. Let me circle it for you. From this high down to here, I put one level of fibs. You can see the fib line going up, and so that's the yellowish color. And then from the highs, the peak there, down to this bottom here, this correction. So that line really, what is that? Blue line shows this correction. Now let me clear that out. So what stands out to me, and again, I know it's busy on this chart, we have a fib cluster. A fib cluster is when you have two key Fibonacci levels, retracement levels come in. So I have a 32, it looks like the 32.8 and the 50% fib level. That cluster comes in right here around 116, and so does this fib fan line. This is a Fibonacci fan line. You can see it. I had an uptrend line here before drawn. There was another uptrend line there I had drawn on another chart, and we've broken that. And so that will come in right around, they should come in right around that 116 level if gold continues to drop. And so that might be a place to go long. So gold is on my radar. I've mentioned that in the trading room via updates. I'm still standing aside. GDX has some support here. This was a former target zone, and you can see it on the 60-minute chart as well. Here's a support zone. So I'm warming up. I'm not there yet, looking for maybe a little more downside, but may start scaling in soon to the mining stocks and gold. And that would dovetail with my expectations for a pullback in the market, because you'll probably see a flight to safety in gold. And again, this warrants a whole separate video. I can make a case, bearish case on the dollar right now. Dollar's been strong, which is also the result, caused this correction in gold and the mining stocks. But I think the dollar is due for a pullback, and that should give some wind to the sails of gold. All right, I'll wrap up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.